Welcome to Economically Speaking by the Nigerian Economic Summit Association at Pan-Atlantic University. In this podcast, we delve into economic issues that affect everyday Nigerians. We discuss, we analyze, and most importantly, we prefer solutions to some of these problems. My name is Nasirudeen and I'm your host.
I am Rosemary Adibe, your co-host. So today on Economically Speaking, we have a guest lecturer from the University of London and a senior economist at NESG, Mr. Wilson Erumebor. You're welcome, sir.
Thank you for having me.
Okay, so just to give a background on the topic for today, which is the resurgence of the Naira. We want to look into what has happened over the past 8 months. Why has there been so much volatility in the FX markets? And how exactly did we get to having an exchange rate of 1,900 to a dollar? And how are we back at about 1,200, 1,300 to the dollar? So, sir, can you give us just a short recap or a short opinion on what has happened in the FX market in the last 8 months?
Yeah, a lot of things have happened, and I'm sure as we all follow the news, especially from the CBN side, if you follow the news, you would see that the CBN has been making lots of reforms. One of them is the return to a single buyer, willing seller framework. The CBN was quite heavy on that in the sense that the CBN wanted demand and supply to intervene to determine the price, and so almost like trying to say that we shouldn't allow speculation to drive prices. And then there was also issues relating to the banks, the commercial banks and net open position, which the CBN is just, in summary, CBN just says that banks, there's a limit of 20%, or 0% long holdings, of foreign currency assets and liabilities, of banks, which means that it's almost like saying all the excess foreign currency or, dollar that you have, sell it in the market. So that brought some liquidity in the market. There's also the removal of the spread on FX transactions in the interbank market. The CBN also released guidelines for bureau de change, which are very important players, particularly given their link to the retail end of the foreign exchange market. So the CBN has asked all the BDCs to sell, at a particular amount. There's also the review of the guidelines of international money transfer operators. So those companies that get to say you live abroad and you want to send money back to Nigeria, those apps that people use, I think the CBN also focused on that and ensured that there's some regulation around that, just so they can use the official exchange rate market. And then, and a couple of reforms, like, more recently the CBN raised interest rates to allow for the inflow of foreign investment into Nigeria. And also there's been an improvement in oil production in recent times. So it means if all of this happens, particularly on the oil production side, there's inflow of, if you earn more dollars because you're able to produce more oil and sell more oil, it means that more dollars would come into the market and then make the rate stable. So these are some of the reforms that the central bank has been able to at least implement in the short term that brought about the appreciation, I would call it, that we've seen in the past few months.
Okay, sir. So permit me to chip in here. You mentioned something that I think is also very important, because whilst the Naira was appreciating, we saw that constant policy, like there was a constant rolling out of policies, and so it's easy to see that there's a correlation between those policies and the increase in the value of the Naira. So one of those important policies that you had just mentioned is the monetary policy rate, which is the interest rate. So just for our less technical listeners, could you just maybe in 2 or 3 sentences just kind of explain what it is and how that's actually affected the value of the Naira?
Yeah, so what monetary policy rate means, every central bank, or most central banks around the world, you would have what we call a base rate. Base rate is like it's an interest rate. It's the rate at which commercial banks lend to the central bank, and also the rate at which the central bank lends to the commercial bank. So, for instance, let's say a bank, cannot have some shortfall in terms of naira, and they need, to boost liquidity. They can go to the central bank and say, look, can you borrow us maybe, I don't know, maybe 5 billion, 10 billion for just a short period of time, just so we can, cover our books. And then so the rate at which they borrow money is what is called the base rate. So in Nigeria it's called the monetary policy rate. So you can imagine if a bank borrows from the central bank at say 20%, if you as a customer then want to borrow from the bank, of course you'll be charged much higher, even though that's not always the case. There are often exception, because sometimes too the bank has prime customers that it lends to at a much cheaper rate. But just for the sake of argument, or just for the sake of theory, so base rate is often the rate that determines, it's almost like the rate that determines every other rate. So if the central bank raises that interest rate, so in Nigeria it's called monetary policy rate. So if the central bank raises the monetary policy rate, it means that most likely other interest rates will also increase. And so imagine right now, where if you make an investment, because there's also an investment side to it, it's not just about borrowing from and to the central bank. So take for instance interest rates on treasury bills and bonds. I'm sure most of our listeners would know that these are, financial instruments that are often sold by the federal government. So from time to time, the federal government would sell treasury bills. So when treasury bills is just a note that says, I want to borrow XYZ amount from the market. So essentially, when the federal government sells treasury bills, it means that the federal government is borrowing money from the market. And so if the central bank says I want to sell 1 billion naira worth of treasury bills, it means that the government is looking to get 1 billion naira from people, from investors. And so what then matters is the rate at which the federal government would pay, on that 1 billion. So if monetary policy rate is high, it also means that interest rate on treasury bills and federal government bonds will also be high. And so you as an investor, you are often almost like you're excited because you will get higher returns. If I lend 1 billion to the federal government and I'm getting 10, maybe before I would get 10% of that as interest, that's 100 million. But now that interest rates have gone up to say 25%, it means I'll get 25% of 1 billion, that's 250 million. So I'm getting more interest, from lending to the federal government, or even to the central bank, because the central bank also issues some instruments, for investors as well. So with a higher MPR, it means higher interest rates on security, fixed income securities. And then what that means is people who are outside Nigeria then see investment as profitable in Nigeria. They can, because elsewhere, for instance, in the UK, for instance, interest rates are like 4%. In the US, interest rates is about 5% or thereabout, depending on the tenure of the bill or the instrument. So if you're getting 4% elsewhere, and then in Nigeria you can get 25% return on investment, it means, why can't I bring my money into Nigeria and buy those instruments so I can get higher returns? So that's the link between raising interest rates and how it links to foreign investment inflows. So it just means the central bank is trying to attract investment from outside Nigeria. And in fact, in summary, the central bank is trying to attract dollars into Nigeria. And when more dollars comes in, it means that the markets then have enough liquidity, or some level of much better liquidity, to pay for dollars that will be going out. So initially, it's always the case that
we don't have much inflow coming into the market, but still we have much outflow. We import a lot. People are traveling for holidays, people are going for school, healthcare, and all of those things. So the demand for dollar is really high, but we don't have enough supply. So raising interest rate then means you can attract more dollar into the economy. And so we're waiting to see numbers, in the at the end of the first quarter, just to see how much inflows have we been able to get in the quarter compared to maybe sometime last year, and to see really if that's the main driver of the stability that we're having in the recent months that you've seen. So yes, that could be a way. There's also a monetary policy, monetary supply, money supply angle to raising interest rates, and just to ensure that people don't spend much, because there's an argument out there that um, part of why the dollar is losing, the naira is losing its value, is because there's too much money and people use that money to buy dollars. So when you raise interest rates, it means, well, instead of me buying dollars and hoping that it will appreciate, the naira would fall and then I'll gain, why don't I just put that money in, say, buying treasury bills, because the returns are now worth it, kind of like you have much higher returns. So that's through perhaps the money supply angle to it. Yeah.
Yes.
Okay. So, sir, concerning the statement you made about the CBN's policy regarding bureau de change outlets, so we know that they resumed the sale of foreign exchange to these outlets, and with some regulations, of course, they are not supposed to sell above a certain profit margin, alongside some other regulations. So, please,
Yeah.
could you give us more insights into this regulation?
Okay, so before we take your before you answer, please, I just want to add something else as well. There's also
Yeah.
been this crackdown on fraudulent BDCs, about 4,000 of them, right? So you can also tie those two questions together and then answer them as one, since they are all on the same topic of BDCs.
Yes, very interesting questions. And what the CBN did, they did surveillance, they were doing some backdoor check just to be sure that all of those dollars were being used, legally, or to be sure that there were not, many of those BDCs were not, breaking the law and driving speculation in the market. And so what the CBN found out is that there are so many of them that are not operating within relevant guidelines. And so the CBN had to make those strong measures, like you rightly said. All of it is in a move to sanitize the market and also to address speculation, because again, your currency could weaken as a result of, like I explained earlier, maybe you don't have enough inflow coming in and you have lots of outflows. But there's also the angle that if just imagine as an individual, if the naira keeps depreciating every day, you wake up, tomorrow is 1,000, next tomorrow is 1,050, the next tomorrow is 1,100, the next tomorrow, it just keeps depreciating. There's that psychological thing that it does to an individual. You almost always think that it will continue on that trend, and so people then start taking positions. People start buying the dollar just so that the naira can lose more value. Imagine you buy at 1,000.
It's kind of what we saw. I said this, which is kind of what we saw earlier this year, because there are people who took positions and then they've had losses. Some had gains. Most people, kind of burnt their fingers with that, because there was a lot of, speculation that the naira was going to keep rising.
Absolutely.
And then people made efforts to ensure that the naira kept rising, so that they could continue to benefit. The exchange rates kept rising, so they could continue to benefit.
Yes. So that is what sometimes is not necessarily about whether you have enough inflow or whether there's too much outflow. Sometimes it's driven by the profit motive of individuals. So what the CBN did was to look at all of these drivers of the depreciation of the naira over time and said, look, how can we address that? And so so all of those reforms you see with the BDCs are part of the CBN measures to address that. Then like reducing the if you go through the BDC's guidelines, what the CBN, in fact, it was very strict and saying if you are caught maybe taking part in speculative activities, there are very severe sanctions for them. The CBN, raised the capital of BDCs, just so they can be stronger. And you have those that are really in genuinely selling dollar for legitimate reasons are the ones taking part in in the foreign exchange market, rather than those that are more interested in speculative activities. So the CBN was really hard on the BDCs, and yeah, so that's part of why we're seeing it is this. In fact, the rate at which they sell now is even lower than the official rate. The official rate is about 1,300 or thereabout, and their rate is quite low. But there's also a concern, because I think you can't have it all. There will always be challenges as you go on, and which is the question that you also raised, that asking BDCs to sell at a particular price, it's almost like you're fixing price. So that would also come with its own risk, as to the fact that what are we really doing, willing buyer and willing seller model, or but the CBN would say, look, it's part of one of its regulatory measures, because again, there's no country would say they want to allow exchange rates to be determined by demand and supply all the time. There are times when the CBN would need to intervene and try to manage the situation, and then, but it's always ensuring that that has to be done within a transparent manner, and that's also what we expect from the CBN. Yeah, so yeah.
Okay, so
So from these regulations, we can see that the central bank is really moving efficiently to mitigate attacks on the naira. But sir, I want to get your take on these policies. Do you think this is a good policy for the Nigerian naira, and how sustainable do you think this policy is?
Yeah, interesting question as to how sustainable it is. Because if you look at the reserves, anytime you, and I'll advise our listeners, students, anytime you hear about exchange rates, right? Naira has depreciated, Naira has lost value, Naira has appreciated, gained, whatever. Always try to go to the reserve. The reserve, external reserve, is a very important indicator for exchange rate in Nigeria. And a reserve is basically is held by the central bank, and then it's mostly in foreign currency. You accumulate your reserves, so you accumulate foreign currency, and that makes up your reserves. So for instance, if the federal government sells crude oil, much of that dollar, cannot be spent in the economy, so it goes to the reserves, and then the CBN, brings out the naira equivalent, which is often shared to the state government. If a foreign investor comes in and say, oh, I want to spend $1 billion or bring in $1 billion into Nigeria, of course you won't see $1 billion on the streets, so that money goes to the reserves, and then the CBN then converts with whatever exchange rate, and that's what is then spent on the economy. So the movement of the reserves, is very, very critical for exchange rate management in Nigeria. So if you import a lot, sorry.
So I think you might have like foreshadowed our next question, our next aspect of our conversation, which is on the reserves itself, because we've seen reports that it has gone to an all-time low, or I think 6 years, in the last 6 years, it has never been this low. And so what exactly is happening? Because the CBN governor, at his interaction with the IMF, said that that is as a result of dwindling. That's as a result of paying back debt, and it's not exactly that they are not defending the naira. That's just them paying back their debts and stuff like that. But that itself, or that news itself, I believe might be responsible for the recent spike that we've seen, the value of the naira. Because about 2 weeks ago, we're talking about the naira being at the exchange rate being about 1,100, 1,080, right, to a dollar. But now it's back up to like 1,300 as at today, as at this morning. So do we think that is it that people aren't buying what the CBN governor said? Because it's actually created a kind of panic that, oh, once we run out of our reserves, things are just going to be, it's going to be the, what do I call it, a dystopian uh, reality on the FX market. So are people, is it that people aren't buying what the CBN governor said? And what exactly do you think about those depleting reserves?
Yeah, what I think basically, I don't think is whether or not people are buying what the central bank says. People are paying attention to what's happening in the economy. People are looking at these numbers. People are looking at what the data says. So right now, as at the 23rd of April, that's like 2 days ago, the reserves is $32.1 billion, right? That's one of the lowest. It's going closer to the $30 billion mark, that we often, would say psychological mark, even though I think it's even much higher now. So what it tells you is that the inflows that we think is coming in, if I mentioned something earlier and I said let's wait for the data to come out, particularly for the first quarter, to see the foreign investment inflows that have come into Nigeria, because one would expect that we should have a growing reserve. So that's that call, or that argument that people are saying the CBN is using the reserve to defend the naira, I don't think is misplaced. Because when you look at the trend, yes, there are times reserves will go down and go up, but not at this pace. I posted somewhere. I posted somewhere in a group chat, as to how much the reserves has depleted over time. Just it was about a month ago, it was $34 billion, and now it's $32.1 billion. So you've lost almost
$2 billion.
that's 1.8, yeah, almost $2 billion within a month, right? That's huge and rapid. So all of those calls that people are saying, look, this is I think it's not misplaced at all. So what my sense would be is that when I listened to that statement by the central bank governor, and I felt, well, I think the CBN should even have said, yes, even if we use part of our reserves to defend the currencies, it's normal. Like, people do it. Central banks do this. Even part of the reason why you have reserves in the first place, is to not necessarily defend, but to intervene when needed. So it means that there's still a clear problem that we don't have enough inflows into the foreign exchange market as we should have. That's number one. And the second thing is that there is a very significant problem of outflows, right? So we still do lots of importation of things that we can easily produce locally, school fees payment, healthcare payments, and many of those things are still happening. So it's either two ways: either you increase inflow or you reduce outflow. And so I think that's where the focus should then be on, especially in the next couple of months, to say how can we, as a country, attract more investments, into the economy. How can we attract, huge? I'm not talking about 1 million. I'm talking of billions of dollars worth of investment into critical sectors of the economy. Things like oil production. Sometimes you would hear we do 1.3, 1.4. If you check OPEC data, is different from what NNPC would report and all of that. We still need oil, right? We still need to increase production, to a critical level, just so we can sustain that inflow. So all of these elements are very important, because the CBN has an advantage now. The fact that it's almost like the CBN is controlling the market, not controlling in the sense that it's putting, it's determining the rate. No, but the CBN is now in charge of the exchange rate. Where it wants it to be, that's where the exchange rate is or is heading to. So we should not lose track of that. The CBN should try as much as, in fact, I would say also the fiscal authorities, not just the central bank. Now I'm speaking to the Ministry of Trade, Investment, people in the oil and gas industry, NMPC, and all of that, exports, and how can we start looking towards that direction and growing non-oil exports, to other African countries. So those are more sustainable measures. So, like your colleague asked, how sustainable it is. If, for instance, Nigeria's export doubled or maybe increased by 25-30% in just one overnight, I would be like, wow, this is something good, and that would have a more sustainable impact on the Naira. If foreign investment comes in to $30 billion a year, I would say, wow, that I would be more excited about that and see a very stronger future prospect of the Naira. But if it's driven by just regulation, we will still go back to where is the inflow of dollar and what is driving the outflow of dollar. And so that's where we need to focus on when we talk about sustainability.
Okay, so I think we'll just go into some FAQs, some frequently asked questions from we
Okay.
gathered this from some of our potential listeners and some of the people we've seen on social media and discussions in general.
Yeah.
So I'll first start with I'll take you from where you stopped. So there's another school of thought that the people who believe in what the CBN governor said. There's some people who believe that yes, this is not about defense of the currency. This is about us clearing debts. And now the debt I'm talking about here
Backlog. Yeah.
is yes, terms of backlog exactly. So if the CBN didn't use part of our reserves to clear, let's say, I mean, they said it was $7 billion, and then we heard that $2.4 billion of it is fraudulent. So let's say around 5 or $4.5 billion was left. So if they didn't use the reserves to clear that, how do you think they might have been able to finance that backlog clearing?
Well, it's simple. If you don't use your reserves, then you use your future inflows, which again is still linked to the reserves, because what it means is that the reserves would have been much higher, if you use your future inflows to clear all of those backlogs, about $4.5 billion or thereabout. So that's the option. If you don't use your reserves, you raise interest rates, and then when dollar comes in, so whatever the inflow comes in, the additional inflow that comes in as a result of your hike in monetary policy rate, that's basically what you would use to clear, the backlog. So so I think that's pretty straightforward. But again, like I said, I think the CBN's concerns, or what the CBN governor said, was valid. That they came into a point where they had very huge FX backlog, and beyond backlog, there's also foreign debt that needs to be serviced. So you pay a certain amount of, for the federal government, of course, would be owing some money in dollars, people outside, and then so you need to pay that, clear some of those debts as well, so all of those would influence the volume or the size of the reserves over time. But again, that's part of why I'm saying we need to increase our inflows a lot more than we are doing now, particularly looking at whether it's oil and non-oil exports, just so we can have more inflows. And then when we need to clear all of these debt, it won't have that much more impact on the reserves.
Yes.
So concerning the appreciation of the Naira, so there was a crackdown of P2P platforms, and we want to know if the crackdown of this platform actually contributed to the appreciation of the Naira, or is it that it just happened around the same period the central bank was implementing a lot of its other forex policies?
Well, I think it's a combination of all of the reforms that the central bank has implemented. So if you remember, I mentioned the reforms for the international money transfer operators, which are those apps that people use to send money from abroad and co. In fact, I was speaking to someone and they were saying like some of those monies don't come into Nigeria. So when they get those foreign currency. They look for how they'll settle the clients, within Nigeria. Perhaps maybe they have some naira sitting somewhere in an account, and then they make the transfer. So the CBN was really tough on them, and then try to ensure that all of those monies are visible into the market, and then they also use the prevailing market rates. And I don't think it's just a coincidence. I think it's a combination of all of these factors, and the CBN, as they were doing it, they were also very clear on, they were very transparent. The CBN governor was explaining how these were done. In fact, this year we even hosted the CBN governor at the NESG, and he spoke at that conference and at that the launch of our macroeconomic outlook, and he also mentioned all of these outlined measures that he's taking and what he's trying to achieve. So I think there's that departure from what we used to have in the past. The CBN is more open, more clear, but again, I would say that focus on the inflows. I think that's even the more areas that we would have sustainable reforms or sustainable impact on exchange rate. If we can get as much inflows as we can, then that would be very, very good and sustainable. So it's beyond the CBN. I think that's how I would put it. But again, the CBN is important.
Okay, so we go to our last FAQ, and I feel like this one is probably the one that's on the mind of every Nigerian. When the dollar rate was increasing, when it was going to 1,900, I think there was even one day, at least maybe like for a day or for a few hours, it had crossed the 2,000 naira mark, and everyone was so scared and everything. We saw quick increases in prices. Once you go to the market, dollar is expensive. E-commerce, people that were into e-commerce, all these like Instagram stores and stuff like that, everyone was just revising prices almost every week. But since the naira has appreciated, and it has appreciated significantly, even becoming the best performing currency in March, we haven't really seen the impact of this appreciation on the prices of goods. Also considering the fact that the food inflation, headline inflation, everything also increased in March, even as the naira was becoming the best performing currency. So a lot of people are asking the question, when exactly do we expect to start seeing the impact of this appreciation on the prices of things that we buy in the market?
Well, what I would say is that I'll make 2 points, and one is that sometimes some of these policies don't have immediate impact because there are people who have stock up orders, particularly people that bought their raw materials or products at when dollar was really high. So you can, I don't think those people would automatically reduce their prices, immediately. So I think there will be some time lag between when that happens and when you will start to see some moderation in prices. And must also remember that falling inflation rates. So when you start seeing inflation rate falling, say later in the year, it doesn't mean that the prices are falling. The only way price will fall is when inflation rate is below 0. So if your inflation rate falls from 31% or 31.7% to, let's say, 28%, what it just means is that the rate at which price increases is what is falling. So last year on-year price increased by 31%, but this time it's increased by 28%. So it doesn't mean that for prices are falling. So I think people need to bear that in mind, because very soon people will start saying if peradventure the inflation rate falls, people will start saying that it's not reflecting on prices are still increasing and all that. So, and some people will start saying inflation numbers are not correct and all that, but we need to bear in mind that falling inflation rate does not mean falling prices. That said, I think there are also other drivers of inflation that me particularly have spoken about it almost everywhere that I can. I've spoken about it on TV, radio, everywhere, and I say, look, it's not just about dollar. Everybody thinks it's dollar, but yes, dollar has an impact, no problem. But think of the agricultural produce that we import, that we transport, from farm to market.
when you are doing that, imagine how much you spend on transport alone. So there's fuel subsidy removal impact. Imagine how much you pay, all those checkpoints when you move checkpoints on the road, how much of those things influence prices. We're talking about things like agricultural productivity, how weak it's been over the years. We're talking about even when you collect your goods from the port, you want to offload your goods into your factory or something. You see people coming to make charges here and there. So many other drivers of inflation that I think are important, and I don't necessarily think we are paying much attention to these drivers. So everybody is just fixated on dollar, and I was shouting that look, it's not just about dollar. There are so many other factors that we must pay attention to. So when are we going to see a reduction in prices? I don't think we will see that across board. Maybe for certain goods like rice and coal, yeah, we will, but not for all the goods, particularly most of the commodities. What we will see is that maybe their price would increase not as much as they would have increased, over time. Mind you, because dollar is 1.13 now, does not mean it will stay like that forever. So there's also that risk that would come with. Are you sure that dollar will not depreciate? Naira will not depreciate over time. So all of those factors will keep playing into how prices will move in the next coming months.
Okay. So I think we can round it off here. Challenge our audience is for them to, learn from this, and they can also leave a comment on some of what they think about these policies. And we have one last challenge for them. One last question.
So to our audience, what do you think the true value of the Naira is?
So thank you, sir, for joining us. I think that's everything that we have for you.
Thank you.